Hello once again, this is Dave Knight here at Knight Capital Management. I want to welcome you once again to the weekly wrap-up and the best trade of the week, and I look forward to showing you a little bit more. As we know, over the week, we had on Thursday uh, past the October 10th lows and also went past the October 2002 lows as well. So the new lows posted on Thursday were a new bottoming lows in the market for the year and also the lowest since October of 2002. Uh, what does this mean? Well, as a day trader, you got to trade what you see and not what you think. That's what I've always told people that listen to me or people that ask me questions. Or, the thing you can get yourself in trouble with is listening to the pundits. Turn on CNBC and listening to them. I think that's a huge mistake as a day trader. You need to trade what the chart tells you and shows you, and not what people actually say. Just because sometimes, obviously, there's things in the market and someone says something that moves the market, but for the most part, I would say the charts hold the truth, and I'm a firm believer that the chart will show you the way. Once again, let me just think about hold on one second, please. Okay, the trade I'm going to talk about today is actually on Wednesday of this past week, and that was on November 19th, 2008. And I'm going to show you how to actually turn what is a losing trade into a winning trade on the day. So let's go ahead and let me blow this chart up, and we can take a look at the overall market. This was my opening trade, and I'm going to show you the market entry, and also going to try to show you a limit entry as well into the market so that you can see the difference between the two. And then we're going to wrap up the day showing this trade right here, and try to do this within the 10 minutes allowed on YouTube. Now you're going to find my educational blog off of Day Trading Knight right here. If you scroll down to the right hand side, you'll see this little box. Just go ahead and click that. And this is the Day Trading Knight. And I want to say that all of my trading charts and software is supplied through the Rockwell Trade Navigator, and that's with rockwelltrading.com. Okay, so now we have the chart of Wednesday up. So let's just go ahead and get rolling. And let's see how this first day. Okay, we opened up. We have a gap open, as you can see. And right now what I'm thinking about between this bar and here is playing the fade of the gap. So let's go ahead and let me pause it at 8:35. Let me back up a little bit. Here in the market at 8:35, there's two ways that you can play this trade. One, obviously, is just to go straight into the market. Some people, obviously will play before this, and that would have been a winning trade for a lot of people to play. But since I trade 15-minute bars, or at least that's how I show, the market entry would have been right here at 128.27.5, or you'd have maybe got in at 28. Another way to take a look at this is actually putting a limit order into the market a couple ticks below the open of the bar. Once it starts, see how it's going to move. If the first tick is down and continues down, you might want to get into market. You might want to put a limit order. I like to put limit orders into the market on a spike reversal, is what this is called. And if let's just see what happens if you would have put in a market order. Here's your market order. Boom. Let me pause this. So here's your market order. As you can see, you already got stopped out, and this would have been a loss of $125 for every contract. That's 8 ticks, or 250 per two. Let's see if you would have put a. Okay, so here we are, and you notice that the first went up, but if you had a limit order a little below the open, you would have not had this movement. You'd have had the possibility to get into the market. It moved in your favor for a little bit, and then it went to move you and stop you out. And actually, I got stopped out on this trade at, if I remember right, 29.5 or 29. But it moved down and it moved up, and the limit order would have kept you in this market, and maybe even have gave you the opportunity to move to break even, and then be able to get out with a little bit of a profit on the move itself. Now I was looking to go to this 13.5 right here, and then I was looking at a target of 16 ticks off my entry, and then I was looking to take the second off a little above this the daily high from the previous day. Go ahead and move on to the afternoon, or actually the late morning trade. Another important component I want to talk about is volume. On the first bar here, it's this green bar volume above average of the moving average volume. turned green. Good trade, good momentum. So there was nothing wrong with the market entry on the spike reversal, and there was also nothing wrong with taking a limit entry on this on the move down. Now we're looking at this bar right here is the volume bar that we're making our trade off of, this one right here. And once again, you see we're staying at green volume and it's looking very strong. So let's see what the market's doing. Now here's the market at the time of entry. And so let me go ahead and put in my targets and everything for you. Okay, so here's my entry. Let me blow this up just a little bit so you can see a little bit better. And we already established it was a green bar volume. Here's what I was looking at. I had a 121.01 entry, as that's what I put my market into, the limit. I was looking for a first target of 121.09, and here is your upper daily range sitting here at 122.09. I put a little below that. I mean, 122.07 to 122.05, anywhere between that area. I mean, even going up to 09 if you wanted to, but maybe even 04, you know, 5 below this, 09 to 05, 10 ticks. This is all good. This is all good stuff, as I like to say. And let's see what happened into the market itself. Let's roll the tape. There we go. Let me just stop that. Now the entry itself was at 10:20 in the morning. Our second entry, obviously we lost on this one. Our second entry, now let me explain why I like this entry. See this right here? High, this high right here is 01, 01. This one broke the 01 to 01.5, and I said if it moves up above it. Now what I like about this one and these two bars, and why I like the entry on this bar, is look at the closes. Open to close, open to close. Close here is was 31, and the close on this bar is 00, 121.00. So it's a small, but you know, that is good. This is good. It's moving up. Your volume is looking good, and the bars are green, obviously, and it's also high to close, higher. So here's your entry, and the 10:20. Now you're looking at 10:24. This will happen in a couple minutes, and you're already out of one contract at 09. You have your other stop sitting here at 09, and you're waiting for this bar to finish up before you move to break even. You're already in a win position. You win 16 ticks, you'll lose 8 if you just keep it where you are, or you could actually move your stop loss up with it, and if you want a conservative trader, be sitting here at break even plus a tick or two. So let's go ahead and roll the tape. Let me stop it. Let me zoom this out. Here's your open at 10:35 right here, and that was at 121.06. This is a good time, I think, after this 15 minutes. Obviously, you can. It's your discretion, either moving now or waiting to move. But regardless, this next 15-minute bar printed, you want to lock in profits. If you haven't locked them in already, you want to lock them in, and you're sitting at break even plus a tick or 2 ticks at this point in time. So let's go ahead and fast forward this since I'm running out of time. And to zoom out a little bit, so now we're looking at the market moving. Let's go ahead and move another bar ahead. Alright, let me pause. Alright, so here we are. Everything's looking good. Let's go ahead. Okay, alright, so let's go ahead and let me pause this tape once again. Okay, so what's important about this bar when it breaks out of this range here is that this gives us the opportunity to move to at least our break-even inch, our first profit target of 09, and in actuality we can actually move with the green moving bar here. So let me go ahead and mark that. So as you can see, we're 1 tick higher than the profit target, and we're moving with the market, and we're going to let the market take us out. Now this is basically this is the fun trade. We can just sit back and just move your profit stop, move your profit stop, move your profit stop until it either takes you out of the green line or takes you out at your profit target. So let's go ahead and move and fast forward this. So our entry is at 10:20 right now. The time is 12:35 in the market. So you've been in the market a little over 2 hours, and you've been riding this nice trend up, 121 and 21. It was at 121.22. I'm running out of time. Loss of 250 on the first, gain of 906.25. Total on the two trades, 656 and a quarter per two contracts traded. Dave Knight here at Knight Capital Management. Have a wonderful weekend. Bye now.